This says it all right here. As Sue said, it was the worst day of the year for the Dow Jones Industrial Average. It was ugly before the opening bell as investors remained on edge about slowing global growth after new reports out of China showed the world's second largest economy is hurting, and a separate report showed that Germany isn't doing much better. That set the tone. Then our bond market gave the loudest signal of all. Yields inverted. That means that shorter-term treasuries paid out more than longer-term treasuries. And that doesn't happen very often, but when it does, it's been a good predictor of recessions. And from there, investors pulled money out of stocks today, with the Dow plummeting 800 points. It was the low of the day. We're at 25,479. The Nasdaq dropped by 242 points. The S&P fell by 85. Now, a lot of this is technical. We know a lot of it's complex, but we're going to do our best to try and explain it and describe how it could impact you. And we begin with the market sell-off and Bob Pisani at the New York Stock Exchange.
The stock market is getting punched in the gut from all angles, including the bond market, which is now flashing warning signs of a possible recession. And there's concerns that yesterday's tariff delays maybe isn't the secret sauce that will improve the markets after all. But the immediate driver of today's weakness was more signs of a global slowdown. Overnight, China released its industrial production figures for July, which showed industrial output in the world's second largest economy slowed to its weakest growth in 17 years. And Germany's second quarter GDP shrank as well, meaning Europe's largest economy is on the verge of falling into a recession. Growth in the Eurozone also slowed down significantly from the first quarter. Now, naturally, economically sensitive cyclical stocks like financials, retail, energy, and tech led the markets lower. Banks got beaten up from pressure on bond yields, and falling crude prices weighed on energy names like Chevron and Apache. But really everything sold off except for gold and utilities and a handful of consumer staple stocks. A basket of retail stocks and energy stocks dropped to bear market levels, meaning they're down 20% or more from their recent highs. Been a tough day all around. So where's the bottom? Some are looking to the 200-day moving average for the S&P 500 for short-term support. That's still a ways away from today's close of 2840. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.